80 kilometers south of Chicago, and it's the end of a very long winter in Illinois farming country. Grain farmer Jim Robbins faces much hard work in the months ahead, raising his crop. But he's looking forward to reaping the rewards.
56 pounds sells for approximately about $5.75 now.
That's 25% more for his produce this year than last.
Things are very good on the farm. I mean, if you talk to equipment manufacturers, they're selling a lot of equipment. People that hadn't bought equipment in previous years are starting to replace them.
Jim has farmed 3,000 acres here in the world's breadbasket for 27 years, growing corn, wheat and soybeans for the home and export markets. Jim pins the hike in his revenue on increased consumption by China and India, a US-wide push to grow grain for fuel, and investors speculating on global markets.
They're seeing the same thing. They're seeing that prices have went up 25%. Well, if I can buy a bushel of corn or a bushel of beans and get a 25% return in 1 year, that's extraordinary for a fund manager, and that's what they're looking at.
The United Nations estimates that global food prices have shot up by 40% in the past year, in part due to speculation. Here at the Chicago Board of Trade, where the global prices of wheat, corn and soybean are set, it's estimated that some 20% of the market has been bought up by fund managers speculating to get a good return on their investment. There are other commodities markets in the world. Latin America has one, Tokyo too. But Chicago is the main center for setting global food prices. Here, in open outcry trading or online, they haggle over the price of commodities for delivery at a set date in the future. But how much is food price inflation down to short-term investors looking to make a fast buck? Justin Shea has worked the market all his life as an independent speculator and now head of his own trading consultancy. He says it's very difficult to know for sure, and the free market provides its own checks and balances.
There's a lot of speculation in the market right now. Some of the fund management crowd will look at past returns and try to duplicate that in the future, but whether that works or not remains to be seen. In the end, if you have a lot of grain on the market, then the price will come down.
Farmers may not have long to live high on the hog either. The International Monetary Fund says the US is quite likely already in recession, and oil is hovering around $100 a barrel, driving up the costs of doing business.
We're going to need these high prices to continue because our input costs, because our fertilizers, our fuel, and our chemicals that we use to produce our crops are going to go up, and that's going to catch up with this.
As he waits for the weather to improve so planting can begin, Jim hopes for a healthy crop, and with it, a healthy payday.
Okay, this farm here is going to be soybeans, and hopefully about the first week in May we'll plant soybeans out here.
After many lean years, he intends to enjoy the extra cash in his pocket for as long as he can. Terrett, Al Jazeera, Chicago.